Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks. Well, in this case, we'll be covering some fixed income, too. 3 charts, 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades, we've got Don Kaufman, co-founder of Theo Trade. Great to see both of us. All right, so in focus today, we've got the bond market in focus today. Seeing a lot of movement in the bond market today, Don. We've seen this sell-off in government bonds, and it takes speed. But tell us about your first trade today. You're looking at 30-year bond futures.
Yeah, 30-year bond futures are really getting hammered in the last 48 hours of trade. There's just no question. Some huge sell-side activity. And there are times in this business where trade itself takes on a life of its own. And we are there right now in this marketplace. Only a handful of times in my career can I actually say that at this point, we want to block out the headlines. Don't even worry about that. Pretty serious situation in bonds, some heavy sell-side activity overnight. I mean, touching down to the 111 level. What we're actually looking at in this first trade, though, is the opportunity of a long position inside of what we term the ZB. Now, this is the 30-year U.S. Treasury Bond futures. Specifically on Thinkorswim, it's under /ZB. What I'm going to do is I'm going to go out and I'm actually going to sell a June 20th 100 put. I'm just going right at the 100 put. I'm going to try to sell that for about 33 ticks. Now, 33 ticks, again, it's fractional denomination out there, 33 ticks, and I am willing to put the bonds, though, if they do come down to that 100 level. I think it's an opportunity in the midst of volatility.
An opportunity in the midst of volatility. Speaking of volatility, Rick, take us through what the chart looks like.
Yes, and when we look at this one, we can see it's been a pretty notable decline during the recent sessions. We saw our red line on our chart here marking a significant low point from all the way back in August. We can also see that after it was broken, it was subsequently a high point then. So that was about where we topped out a few days ago, and now things have deteriorated. We've broken through an upward sloping trend line. We've broken below our moving averages, yellow 21-day, orange 63-day, purple 252-day exponential moving averages. So we can see as well now we are coming up to our low point here, our 52-week lows near 110.19. So a difficult situation, and just something to consider as well too, that options on futures have some peculiarities. They're a little bit different than conventional stock options here. So something to keep in mind. They do require an additional level of risk approval. So just something to keep in mind here as we consider this situation.
All right. So certainly some perspective there. Don, any final thoughts before we move on to your next trade?
Yeah, Rick, I mean, come on, man. The risk is absolutely there, but the risk is actually everywhere in this marketplace. So what I'm really doing in here, though, is ultimately I'm trying to bottom fish the bonds a little bit. And again, I don't mind if the bonds do get put to me at that 100 level. I'm fairly comfortable being a buyer there. And that is exactly that kind of risk tolerance that Rick was mentioning just a moment ago.
Okay. All right, let's move on to your next trade, Chevron. We've got Chevron in focus today. It's under a little bit of pressure today, has been under pressure year to date in terms of its performance. What's your thesis here, Don?
Yeah, one of the first things I want to mention is oil, and obviously in conjunction with Chevron is oil. So oil is very likely pricing in a major economic slowdown, almost definitely a recession, very high probability of such. Nevertheless, the sell side activity specifically in CVX, just over the last 5 trading sessions, this underlying is down 35%. Just because we're pricing in an economic slowdown, possibly a recession, doesn't mean the world is coming to an end and that everything is going to stop. I think it's actually opportunistic at this point for what we term kind of a bid back, that quintessential rip and rally, and we haven't had it yet inside of Chevron. As such, I'm just going to go to the April 25th expiration, which is fairly short dated. I'm going to be buying a 136 call and selling a 140 call. So it's a $4 wide call spread for a $1.70 debit. Nice bullish trade here, looking for that rebound after a 35% sell-off.
Okay, $4 wide call spread. All right, but Rick, let's talk about this chart for Chevron. I mentioned year to date, but I'm sure you have even more perspective. What does this chart tell you for Chevron, Rick?
130, 136 or so. That's a level that stuck out to me as well, to piggyback off Don's comments about his options trade here. The reason is because from back in September, that was our previous 52-week low, was right around that level, 135.37. So that's roughly where we're seeming, hopefully for the bulls at least, to be finding a foothold here. We did mark some new intraday lows today, 133.88 so far. And it's been quite a severe sell-off, almost a 20% decline in just a few weeks here. Notice as well, RSI is in the oversold area at this point here. So it would be interesting to see if we do start to get a bounce, if RSI starts to move out of that oversold area above that threshold of 30 and starts to recover. The place to look for potential resistance would be the series of old lows, 141. That's our red line on our chart there, our dashed horizontal line. Just above that, then we have our volume node near about 145. This is an area of particularly heavy trading. You possibly could expect to see potential resistance or consolidation in that area as well here, Diane. So for now, though, we had a period of our moving averages grinding sideways. Now the faster ones are crossing below the slower ones. They're not really much help in a situation like this because the price has moved so quickly. They are lagging far behind. So something else to consider.
Something else to consider there. And one final trade in focus to consider. We've got Nvidia on your list, Don. Let's talk about this one. I mean, shares are gaining some ground today, but it has really had a difficult year this year, even despite, how strong some of the fundamentals have been for this company. But talk to us about why this one is on your list.
Yeah, this one's actually on my list, but from a much larger perspective. First of all, yes, Nvidia is down quite considerably on a year-to-date basis. Nevertheless, look back to the last 5 years. So, Rick, it's something fairly spectacular because you're going to see that Nvidia for the last 5 years is up still almost 1,300%. Okay, it is the backbone behind the NASDAQ. And if the NASDAQ is going to still see some volatility, some sell-side activity, NVIDIA is almost definitely in the crosshairs. So this next position is going to be bearish at this point. Again, up nearly 1,300% over the last 5 years. And I think NVIDIA is in the perfect position right now to largely be disrupted. This is one there, you were just talking about, Diane, a moment ago, maybe the bottom line in here, some really solid fundamentals. But look, we've already seen the DeepSeek debacle. There's more to come. Other firms are building GPU that's going to be the equivalency of what NVIDIA is doing. So they're not going to be able to stand alone much longer. With that, again, I think this thing is going to continue to come in. I'm actually going to give myself a little duration in this trade. I'm going out to the June 20th expiration. I'm going to be buying a 94 put, selling an 84 put, looking for kind of a wild and woolly move to the downside. That is a $10 wide spread. Although in the near term, I think you can still see NVIDIA bounce. I think there's more sell side activity to come in the near months. This one is actually done for a $3.30 debit. Again, looking for a fairly significant move back even under 80.
Okay. All right, then, even under 80. Wow, that's a bold call there. All right, Rick, take us through what the technicals look like for NVIDIA.
So on this chart here, if we were to take it back a little bit further than 1 year, we would see that right about where we are now is the old highs from 2024, around 90, like around that general level here. It's just kind of just out of the view of this particular chart here, but you can see that there's heavy volume at this low area near 88, 90, around that point. You can also see our light green line matching up with that low from August 5th, a significant low point for so many stocks here. Recent price action forming a falling wedge type of shape here. We've fallen below all our moving averages. They're all trending downward. We've given up the volume profile point of control. RSI trending lower, out of the oversold area, but still not anywhere near that 50 midline that would suggest a shift to bullish momentum once again here. So I kind of see Don's point here. If we start to break below 90 too far, there's not really a whole lot, it seems like, to break the fall. That would be a significant move below what was previously an important high water mark here. So if we were to move upward, though, green line represents some old low points, barring our rather anomalous August 5th low point there. For the most part, price stayed above that line near about 101.50 or so. So that could be a resistance area to consider.
And then, Don, I want to ask you a quick follow-up question. Is that put vertical also about kind of some of the overall market sentiment? Is that why you chose that?
100%. That's exactly what I'm looking at. As I said to you a moment ago, trade sometimes takes on a life of its own. Like one of the things I've been looking at this morning, all morning long, we're all looking at the VVIX, the volatility of the VIX, and noticing somebody in VIX has been buying 130 strike calls in size this morning. There's volatility issues ahead right now. I think Nvidia is probably going to be one of the better bets for that volatility.
Okay, all right. That's Don Kaufman and Rick Ducat for a look at Nvidia finishing out our 3 trades. Thank you both for being here.